welcome to the Daily Rip Live. It is Thursday, June 12th, 2025. I'm Katy Perry, here as always with Shay Boloor. And momentarily, we will be joined by Daniel Newman, CEO of Futurum Group, an old friend of the show. Shay, how's it going? We're almost to Friday. Did you have a good week?
At an exhausting week, I think
Do you
it's
have
probably an understatement.
big Flag Day plans on Saturday? What are you doing to commemorate Flag Day?
So it's actually my B-Day weekend. I'm turning the big 32. So
Shaq
yeah.
year.
Yeah,
Shaq?
Shaq year. It's last birthday before I get married, so it's
Oh
essentially my
my.
last birthday ever. Because we'll
Well,
see
what's
how she reacts when we're married and she celebrates my birthday.
what's on deck?
I don't know. It's a surprise. It's gonna be a complete surprise. She's incredible at planning parties and events. So, like, I think
Okay.
she loves like controlling a birthday without letting me have any input.
Yeah.
Because for me, it'd just be arcade games, maybe some golf, sushi.
Yeah.
So we'll see.
Okay. Well, we'll need to get the full update. I love other people's birthdays. I don't really love my own birthday, but if I get really excited about other people's birthdays, when's the actual B day?
Sunday,
Oh
so it's
my
on the
God.
weekend. Well, question for you, like, I think universally people hate their birthdays, but if someone like you're dating approaches, like you're dating someone like they love their birthday, they go like they're
Yeah.
super happy. What does that tell you about that person?
I kind of love people who love their birthdays.
Really?
Yes, I know. I just think it's kind of like earnest and endearing. And like I know a couple people in my life that always make a big deal of their birthdays. And I like love it because I'm like, yeah, let's celebrate something. But it's just like not for me. Like, what about you? Is
I've
that a
never,
red flag?
no people. I don't know anyone in my circle that loves their birthday,
Oh,
but it
really?
might just be like a guy thing. To be honest, it
Yeah.
might just be like a
I know
macho
a guy
dude
who makes
thing.
a big deal, but yeah, I think it's cute. I know it's definitely like some people think it's annoying. I think I really like when people get excited about dumb things. So, uh, well, let's take a look at the markets as we're waiting for our buddy Daniel to pop on. The S&P closed a little above 6,000 yesterday, down 0.3%. The Nasdaq fell 0.5%. As we talked about yesterday, pretty chill day overall. Inflation rose 2.4%, but that wasn't really an eye-catching headline. We of course had the trade developments. So Trump announced that the U.S.-China trade deal was done or very close to being done. So that again was the 55% tariffs on Chinese imports, and China will levy 10% on U.S. goods. Bond market reaction following inflation, 10-year treasury yield fell to 4.413%, indicating increased investor confidence in rate cuts coming down the line. And we got some stuff going on today. I don't know if you're following the Oracle news today, Shy. Oracle stocks popping after a cloud-fueled earnings beat. Their shares are up 8%. They beat expectations and forecasted cloud infrastructure revenue to grow over 70%. Uh, do you think this Oracle beat proves that legacy tech players can outmaneuver the hyperscalers in the AI gold rush, or do you think they're still playing catch up there?
Well, I think uh, Daniel's in the waiting room if you want to let him in because I do want to talk about this name with Daniel
Yeah.
because
Okay.
this is one of our
Perfect
future
timing.
yeah, hey Daniel,
There he is.
perfect time. We are just bringing up
Good morning.
Oracle owning, so it's a good timing that you hopped in. You probably had Spider-Man instincts right there, but yeah, for Oracle, this is one of the names in our Futurum AI 15 list. Like we believe that Oracle yesterday's earnings was validation of our belief on why they belong in our top 15 is they're these legacy players you might call it, but or mature databases. They're going to experience a renaissance with this second wave of AI. And yesterday's earnings report you saw immediately went red, then all of a sudden 10% bounce. Why was that? Is because you heard Katz and Ellison on the call just be a lot more declarative than they used to be in prior earnings, where Oracle is now building towards this dominance in the layer of AI that no hyperscaler can really lock down yet, which is the enterprise data layer. And you see in the numbers, like RPO went up 41%. I think they mentioned some commentary on the guidance that it will be more than double that in the fiscal year 26, which is what really caught the bid after hours. Then you also saw the cloud infrastructure growth be above 50% with a guide to 70+% next year. So you're seeing like all these numbers back up the narrative from the management on the call that we're experiencing a renaissance. And I do believe that in the next couple of years, it's positioning Oracle to be that trusted data pipeline for AI.
Mm.
And I would love to hear Daniel's perspective on this because he's very in the weeds with Oracle.
Well, first of all,
Welcome, welcome. Put you right in. We're gonna throw you right.
sleeves. I rolled up my sleeves because Shay, I thought we were going to debate. We're going to have a quantum debate. That's what I'm ready.
Oh, that's later, Daniel. That's we're saving that. That's
okay.
it's like the boxing matches. We're saving it for the end. This is
If
just
if we're going to Oracle, this is easy. Let's go. Well, first of all, everything you said, Shay, is indicative of why we identified this one. Probably one of the most interesting things was over the beginning of like several years of the cloud, right? All the cloud providers really wanted to be the cloud. So the kind of whole premise was everyone was going to move all their workloads from on-premises to cloud. So AWS wanted everyone's workloads, Microsoft wanted everyone's, Google, and the interesting thing was in the beginning, it was like, you're going to go to one cloud. And then what ended up happening was everyone realized you're going to go hybrid. It was like, you can't move all that enterprise data from your enterprise data state to the cloud. So then this hybrid era came. And then everyone realized, holy cow, when you're trying to go global, you've got your data on-prem, you've got your data in the cloud. Different cloud providers have different regions, they have different functions, features, tools, data platforms. And so we're going to need to use different clouds. And so then you saw the multi-cloud era. AWS was the slowest into this. And Oracle was kind of just quietly doing its thing on the side. But the one thing that none of the enterprises could escape is, there's like 400,000 plus of them all using Oracle's database. And so actually last year was probably the number one proof point. Now we've been, at Future, bullish on Oracle for multiple years. We've been trying to tell this story, same as we've been trying to tell with IBM. It's like we kind of see these things happening well before they actually happen because we're actually following what the enterprises are doing. So the cloud providers, AWS, Google, and Microsoft, all over the last year announced partnerships with Oracle, meaning they all announced multi-cloud database partnerships where basically they're saying we are going to make it accessible to run Oracle database in our cloud, and we're going to do it in a partnership way so it runs faster. Because the bottom line is Oracle's cloud could run the Oracle database so much faster that it was causing more friction for people that were using other clouds. It was driving more workloads back to Oracle, and it was giving Oracle asymmetric leverage. So kind of what ended up happening now is all the clouds have reconnected, Oracle being a bit of this centerpiece. They're actually and by the way, anyone that knows Oracle knows that this is 100% against their DNA. Like, they are a rule the world kind of company, but Oracle realized it had the best mousetrap on database. They weren't going to get everyone to move off their clouds, so better kind of together. And it's actually really indicative of how the AI era is going to go. There is not going to be a single winner. So all these clouds can grow, but amazingly, Oracle is actually gaining more market share on a quarterly basis in the infrastructure space than any other cloud. And so you just see all these things happening at once, and you say, Oracle is really well positioned. They're really sticky. And if data is really that difference, remember, 99% of enterprise data has not touched AI yet. 99% of enterprise data has not touched AI yet. Say that twice. So if you're thinking about enterprise data,
Daniel, I've never seen that stat. That's wild.
Yeah, I actually heard it. And I had a conversation with Arvind Krishna, IBM CEO, and he was the one that kind of ran that past me.
Crazy.
And a lot of the data, just to be clear, Katie, is not all data that is going to be important. You got data on tape, storage arrays, but the bottom line is that enterprises have moved so much slower. So if you're kind of looking for the trade, you're looking for where to get in and win on AI, the enterprise is so much slower than these consumer applications, and there's so much more opportunity. That's why we like the Oracle, ServiceNow, Salesforce's, Palantirs, because they're just beginning to monetize AI.
And it's also an additional color to that, like the compliance and the mission critical nature of these data systems are imperative. And Oracle, that is their moat, is that compliant and mission critical data system. So I think it's really important. That's why they're cementing themselves in our belief that, or mine's, we call them the data nerve center for enterprise AI, because they are just so embedded into so much AI deployments. And that is just beginning, like what Daniel's referencing, like 99% of the data is still not even touching AI. There's a ton of runway.
Yeah, I mean, it's interesting. They IPO'd, I believe, in 1986. So it's interesting when you guys talk about your AI 15 and some of these companies are talking, like, we're talking like startups, but we're talking this is like an OG internet stock. And Shy, when you mentioned the compliance, when you say that, do you mean it's basically as simple as like in some of these instances with data and data governance, it's better to be super corporate and have like 40 years under your belt of dealing with this stuff? Is that what you mean by compliant, or can you shed a little color on what that
So
moat is?
So the reason, like what Daniel's referencing, like 99% of data hasn't even touched AI yet. So everyone's experimenting right now. We believe that we're past the experimental phase. We're towards the production phase now, or deployment phase. So when you all these enterprises, when you want to adopt AI and you move from prototype to production, the database that matters more than ever is what Oracle provides, which is that stable, compliant, mission critical data system that's been validated for decades. You know, it's the strongest. It's not going to mess you up at all when you transfer from prototype to deployment. That's what their mode is. And I think you also have to remember, like, who was embedded into Stargate. It was Oracle. Oracle is is the center of what is going to become the largest AI infrastructure deployment maybe in history. I don't know that fact. Don't hold me to that, but it's massive. And Oracle was embedded dead in the center of that. So I do think a lot of their material upside going forward is going to be in its ambitions to catch, like, I don't know, the other cloud providers like AWS, Microsoft, and Google's as one of the largest hyperscalers, but they really are becoming the enablers for all these hyperscalers.
And if I can add for everyone out there that's kind of trying to better understand is, the AI era is basically a 100% pivot of what infrastructure looked like to what it will be. So like, this is when you hear Jensen throwing out $100 trillion of infrastructure that's going to get built out. Literally every data center that's ever been built was built for what we call the CPU era. It's the original compute era. Different compute architecture, different network architecture, different storage architecture. Most of the data that people are accessing were in rows and tables. Like, you play in Excel, Katie, or like there's like a massive version of this that was how these tools, these applications were able to see a company's data. But right now, to this point, SAP and Oracle are probably the two biggest central nervous systems to a business. So their entire supply chain, their entire operating layer, so the ability for them to actually invoice a customer, to see a transaction, to understand everything the customer ever did, to make that they're able to get critical supplies, to be able to continue to manufacture goods. It's all sitting in Oracle. So they literally can't get off this thing. It is 100% dependent. So it is so sticky. Now, in the AI era, data will become this sort of amorphous layer where you don't need to have it in blocks and storage and files and inside of these kind of complicated database systems. What will happen is it becomes abstracted away. All data, it's all about just having it cached closest to the compute in memory so that you can access it. And that's where, like this, they'll be able to watch our show instantaneously. AI will be able to pull commentary from our show to be able to feed an LLM to be able to do something in an application. But right now, most of that's still really hard to do. So these companies can't get off Oracle. They can't get off SAP. And that's the only other reason why SAP and Oracle throw each other blows during every earnings call, where they talk about whose customers they've stolen from each other. Because right now, those two business layers are so critical. So it's kind of interesting, but Oracle's been a little bit slower and more methodical, but they are so sticky. And I think that's really why, at least Shay and I didn't agree on all the parameters of why we pick names, but that's why we kind of, we had slightly different ideas of why but like, we both kind of agreed in the end, like, customers and enterprises can't get off this stuff. It's like the crack for their business.
Well, you answered the question I was gonna ask, which is it's SAP and Oracle is a duopoly, and you're either or. Is that how it works? And they just trade customers. They cut a deal. They give someone a discount, and then a few years later they go back. Like,
there's a few other ERPs, like Microsoft has one, but it's relatively small in their business. I mean, if you kind of go across the world's Fortune 500 companies and probably the 2,000 largest enterprises, I would say it would be in the middle upper 90% that's running in SAP or Oracle.
okay.
A small percentage of them probably run something on Microsoft. And yeah, I mean, they basically own that layer. Now, it is going to be on them to transform that layer, make that data unstructured and available and close to compute. And I think that's the Stargate kind of model of NVIDIA and OpenAI and ARM. And what they're trying to do with Oracle is basically understanding that is the past. It is the past. And so they're going to have to change that for the future, but it's going to take years to abstract that away, because these companies, literally, if they turn it off for a minute, their business stops printing money. It can't function. By the
Yeah.
way, Palantir could be a disruptor here. I mean, that's another one, and that's why
Oh,
they're so high on
interesting.
our list.
Okay. Real quick while we're on Oracle, have you heard anything in conversations you've had, Daniel or Shay, on TikTok? Their name was swirling around that conversation, and then we moved on to the next thing as a society, I guess. But is that something you think it could happen? Their involvement there with a deal, or you think they don't really care end of the day?
I'll
Try
let.
to get anything there.
I mean, I think Oracle would love that. First off, I think that partnership would just be music to Oracle's ears, because I do think it would highlight the strength of Oracle's OCI, the cloud infrastructure, and their ability to manage one of the world's largest data ecosystems, because TikTok has so much data. Everyone uses. Doesn't matter if China can monitor you, like nobody will stop using TikTok. It's a massive data ecosystem. So if Oracle's getting embedded into that through a partnership, it's a match made in heaven, in my opinion, for their database management component of their business. But what do you think about that, Daniel?
Yeah, maybe the producers can look this up, because I'm not like, I'm too old for TikTok. My kids use TikTok. I'm joking.
We
I
know
kind
you
of
know
look
all
at
the
it.
dances. We know you're like in the
It's a
mirror.
black hole, Katie. It's a black hole. I go
You're
on, I
just
never
in
get
the
off.
morning, like getting ready.
Yeah, that's how I pump the stocks, right?
Yeah.
I believe in the, like I said, maybe the producers can check this out, but I believe Oracle is hosting the infrastructure for TikTok US. I actually believe they are
Okay.
doing that right now. There is a relationship there. Now, the idea of that joint venture to take on the algorithm, it's like, I don't know what happened to that. I think it got deprioritized with, wars in Russia, the Middle East, tariffs, the China-U.S. debates, figuring out chip controls. It was like, I don't know how important it really is, but yeah. So there you go. Thanks. Thank you, producers. That's why I love having these people. I was pretty sure I'd read that, but I also can't really remember.
That's why we got the
everything.
internet.
Can't remember everything I read. My
Right.
photographic memory only lasts like a day.
Yeah, and then you got TikTok. You got TikTok brain because you got all that
Getting old.
choreo that's just looping. And
you guys are spring chickens. So, old people.
Before we move off Oracle, I want to go back because you guys, it's AI 15 is the list. And then Daniel, you mentioned like generally, you and Shay collaborating on like how you picked companies at the most basic level though. What are you looking at there when you're deciding who makes that list, and how often is it going to be updated?
Yeah. No, thanks for asking. Look, when we set out, we said, look, when we set this thing, there's a lot of people out there just kind of doing buy, sells, and pricing. We wanted to do something that was a little bit more about conviction, because it works better for timing. And if the investors that are out there, it's all about really understanding that the market does things in very short periods of time that are very unexpected, but over long periods of time, when you understand the conviction. So Shai's probably mentioned the whole AIR concept, which is about access, insights, and research. We are deeply inside the rooms with many of these tech companies. We know the executives, we know the story. Of course, we never share anything that's NDA. That's a very, very significant wall that we have. But we have the access in these companies. We have the market intelligence that our platform is collecting about ITDMs, buyers, what people are doing. So we understand the buying patterns that are going on in the market. And then we basically look across the research and we said, one is, we look at, are the companies growing the right way? So we had a rule of 40, 50, 60 impact number in this. We had overall, we looked at margins and revenue growth against how they are guiding the company. Are these companies consistently meeting the guides that they're putting into market? And then we had sort of our access score, which is the proprietary knowledge that we have from being in the relationships, talking to their CEOs and talking to these companies, getting to know their businesses, know what they're doing, and having a better idea of the market. And then, of course, we composited this. We weighed, like AI, we used, weights and biases on these different scores, and we sort of put it out there. And the last part of it is really just our personal conviction on these names. Like, how much do we believe that, because this stuff comes back to bite us, Katie. You put it out there, you say what you believe, you give something a score, someone puts $1 because of uses your research in some way. Again, we're not providing a financial advice. We're not saying to buy anything. We're saying this is our conviction. This is what we as Future Equities believe are the best names. Mm-hmm. But of course, you see how things work on X, and you see how things work. People are going to come back and tell you, you don't know what you're talking about. And, they're also going to tell you, hey, we listened to you as part of our strategy and we did great. And so we want to really make sure that we were using all the information at our disposal, our understanding of the market, our personal beliefs and convictions, and of course, the data, which we have, put those things together and basically say, who are those companies? And the only thing I say, Katie, is we said everybody knows the Mag 7. So it's like we were just bored. So even though some of our names are still exciting and top names, we're like, we're not even going to play with those because everybody knows that those are the AI names that are investable. What's next? We actually came up with 7 more kind of honorable mentions. And I think the plan is on somewhere between a monthly and quarterly cadence, just like an ETF, we're going to rebalance it. So if we see trends that are working the wrong way, we're going to rebalance it. Things will move up, things will move down, things will move off.
Yeah, I think it's a good call out of how to just look at content, online research. ARC is a great example. They make amazing content, so many great calls, but they've also, they miss too. And good frame of reference. Speaking of research, you guys aren't subscribed to the Daily Rip newsletter. You should be. Quick plug for those guys. Hardworking people pulling together a massive recap of everything that happened during the day at the market close. So you watch us in the morning, then you get the newsletter at night. It's great. There's a link in the YouTube for that. But quickly, let's move to, we have a big IPO today. And I know this is not in your AI 15. This is a FinTech. Chime is making a move today. This is a large neo bank. A lot of people are excited about this. This is sort of like a mass market product. I think, Shay, you're in LA, I'm in New York. Like, I don't know a lot of people that use Chime. Where I grew up, I'm sure a lot of people use Chime. So it's a big company. I believe they've been around almost a decade. They're priced at $27 a share, above its expected range. They got the ticker CHYM.
SoFi.
What's up?
SoFi. Just by SoFi.
SoFi. Just by SoFi. I mean, I was telling Katie and the producers before you hopped on, Daniel.
No, Shay, you go first.
No, I was gonna say this is a pricey IPO if you want to use SoFi's valuation because it's 5 times the multiple that SoFi is trading at right now. So either Chime is oversubscribed and the valuation is going to adjust itself towards the mean, or SoFi will catch a major bid to catch up to what they should be comped at. So one of those two things have to give, and I think this is most likely scenario will be SoFi catches the bid and starts getting comped correctly. But I know, Daniel, you're a SoFi bull, so I want to hear your opinion about that.
Look,
are you a SoFi bull?
I
couldn't tell by you whispering SoFi.
Yeah, this is my aging, like where I think SoFi is a cool new neo play, but then people are like, no, it's Robinhood. Actually, I'm a bull of both, which is like rare. Like usually people can't.
Yeah.
But I actually don't mind investing in 2 different things and making a lot of money. See, all you out there, you can buy more than one name, and you don't have to actually be angry about another name doing well. You can just buy both. There's an investment advice for you.
Yeah.
But anyways, so I think the valuation's stupid. I mean, they make almost no money. I think they obviously have a product very much like early days. This is the difference, in my opinion, of a SPAC versus a true IPO. When you're backed by the right partners and banks, you can go a lot faster. And I think SPACs have been generally penalized, especially the ones that Chamath put out. I'm kind of joking, but God, they just really have.
No, the SPAC stench is very real.
Yeah, there's very few SPACs that have done well, and this is another instance. But this, look, it's on fundamentals. I mean, it took a while for SoFi to get the revenue, the growth, the margins, the EBITDA. But now it's got a real shot of being in that S&P mid-cap 400. And it's valuated, to your point, Shy, at about 1/5. So I won't hold it against people who have watched this kind of IPO wave over the last few months and seen just these massive upticks, everything from like the Newsmax ones and the Webull ones, it just ran. And a lot of them came back. But the point is, like, if you can get access early, you can oversubscribe to it. But like the fundamentals don't make sense. Like I would still buy Robinhood. I would still buy SoFi. There's even Square's undervalued here. Like there's just so many interesting companies that's like in this space. But I know because they have the right partners, they have the right backers, they're going to get enough capital into this thing, and it's probably going to get valued at 3 or 4 times at least what SoFi is. And I'm going to be irritated about it every day that I look at it.
So I got a question on this neobank thing. I think we briefly showed the chart on just like the neobank is becoming, and we talked about this before, Shy, like, it's like our generation will, like, Robinhood is our Chase or whatever, or will be. But you have all these other players. You got Current's got 6 million users. Vara's got over 3 million. These are still private. And then, of course, SoFi is banking. Dave is publicly traded as banking. Do you guys think that, like, the TD, like some of these old school banks, are they going to go away and like the new crop of banks we sprinkle across will be these neobanks, or do you think some of the old banks will sustain and then we'll have some new ones emerge?
So I can get into this before passing to popcorn and over to Daniel. I do think the past decade, let's just say that since 2015, there's been a fintech thematic that has been misleading in a way, because I think the whole story for fintech was always sold in, like, let's just call them pixels. Like, it was just slick interfaces, exciting apps, and a promise that legacy banking was obsolete. But it really wasn't anything about the economics changing. It's just the design of it did. But as soon as capital started tightening up, and interest rates stayed stubbornly high, like it's been the past couple of years, you've seen that illusion start cracking a bit in that whole space. So that's why, for me, I'm bearish on the fintech thematic, but I'm bullish on specific names in it. Like the ones that are drawing a harder line between fintech names that are built on a low rate enthusiasm and those with balance sheets are actually hardened for the long haul. I do believe SoFi and Robinhood are part of the latter, where they are fundamentally different than the other names in that space, and they have a lot of runway because they operate differently. And even though Robinhood was born in a zero rate world, it became the interface of a movement. Like we call it all the time. Their capitalism on degeneracy and morphing into a media company, and their TAM is just expanding. So I think that you're going to see a ton of fintech players out there, and they're going to look tomato. But don't confuse Robinhood and SoFi in that bunch, in my opinion.
Well, you saw them both show up in the Invest America, the new Brad Gerstner
Mhm.
effort, which I thought was really interesting because, I've had this talk with you, Shy, offline, but I'm like, I don't think the customers for Robinhood and the customers for SoFi are the same. Now, I do see with some feature creep that there could be some competition for some of those customers, but one's very much kind of like your traditional, I'm 25 years old. I've got a job now. I want my direct deposit. I want to have access to maybe some mutual funds, ETFs. I might want to buy a Bitcoin fund. Like these are kind of your conservative people, get a loan for a car, my student loans. Robinhood is like what you talked about, like the capital degeneracy, where it's like, look, I want to be financially independent, young. I'm going to take half my money and start investing it. I'm going to pick stocks. I'm going to buy crypto. Like I don't even want to, they don't even want to be in association with what their parents called a bank. I mean, it is a completely different customer set. And so that's why I find it so interesting. Everybody wants to do the A/B test. And like, it's two different groups. And by the way, between them, they have like 20 million or something users.
And a lot of people have both. A lot of people have different fintech. I used to work at a fintech. It's so interesting you made that point, because when I started working at the fintech, it was 2019. So it was before COVID, the trading boom, when we were a trading app. And I remember like the marketing strategy was like, okay, the number one thing people are looking for is like trust. They need to know the brand name. And it's like, to what Shy was talking about, the UX and the design, they didn't directly change the economics, but it seems like they almost did, based on building something that was built for a different generation, which brought in new customers to their product, which benefited them economically. But it's changed so much. Like if I were to go back and do the marketing strategy again right now, it would not be we need to look trustworthy and say, like, it's a totally different world out there, as Howard Lindzen often talks about with the degen economy. But I do think there's probably a lot of people that have SoFi and Robinhood. Like I got like 5 fintech apps on my phone. And so like, I think that's why you also see Robinhood trying to like take pieces of different things. And Shy and I have talked about before. I don't know if you agree with this, but like it feels like they're amassing like this ecosystem over at Robinhood, which to me is pretty fascinating.
I just know I forgot to accept the gold card that they offered me. So
How do you?
I heard that's pretty rare though that you get those. But
What do you mean you forgot to accept it?
Yeah,
It's
they
like
sent me
sitting
the
on your
offer.
doorstep?
No, they sent me the offer for it. And I'm just I heard like that was the one thing that like everybody's trying to get is the Robinhood Gold card. I heard it's pretty awesome. But no, they're trying to allure different archetypes of customers. I'm too old for Robinhood though. But I do like the. Oh, I just kicked my computer.
Well, their median age, Daniel, is 35, so it's not like 20-year-olds anymore. I think that's their big challenge. They got to shake this like GameStop thing.
I'm 70. I use a lot of good peptides.
At 35, it's like you're like a grown ass person. Like I would have guessed like 28, I think.
Well,
like Shy, what would you have guessed?
Yeah, I would guess younger, but again, like I'm 31, pushing 32 this weekend. Like I use Robinhood for
Pushing
most of my
32.
funds.
I remember when I was pushing 32.
No,
Back
but
in the day.
I do think that's why Robinhood's so perfectly positioned for Invest Americas, because 35-year-olds are typically when you start a family, like around that time. Like that's like the heart of it. And what better demographic than what Robinhood has on like every kid going forward next couple of years gets that $1,000 right at the gates. You lock them into the ecosystem, and as they get older and older, you can then spiderweb effect. You get them card, the first 401k. It's all in the same ecosystem. That's why it's like a very interesting tailwind long term if Invest America really does push through, which I hope it does. That is like, I don't like the government. I hate a lot of initiatives. That's one like standing applause. Like this makes too much sense not to do.
Yeah, when we were talking about it yesterday with that, I'm like, there's got to be a crypto component to that, given all the other conversations too, which is we could go all day with that. Well, the market is open. The stocks are opening a little bit lower. Looks like there's some potential for unilateral tariffs in a couple of weeks. So continues to be the theme song of the summer. What else?
Actually, Kate, I don't think anyone cares about tariffs anymore.
I care.
I don't think.
What are we going to talk about if there's no tariffs? I mean,
we got to talk about the ice cold inflation data.
Yeah.
that came out today. PPI lower, CPI lower. You could talk about, the jobs report. I think there was one that came out today. Shay, have you tweeted about it yet? You usually hit that stuff pretty on time.
I think we had a jobs report last week. What was the one this week?
I think last week was ADP, and this week is the unemployment. I don't know. I saw it. I saw it this morning. Yeah. So.
Well, it's certainly the market is reacting to something this morning where we're a little in the red. But to your point, there's a lot going on. There's a lot going on.
Want me to tell you why we're in the red? It's the same. It's the same geopolitical cocktail that we constantly get every couple of months. Like it really is. It's the Iran. I think that it's Israel and Iran conflict. I think Israel is like there's some commentary overnight that there might be an attack from Israel towards Iran. Either way, like I do think that if we get this is common every couple of months, we get the geopolitical headline of this, a sharp pullback, which it's getting scooped up again. Like any pullback we've gone, it's been shallow bids. Like we bid and shallow pullback, but it's always a course of fear that's going to continue every couple of months. So just know that it's noise.
It's
on you.
Substantial.
Yeah.
I mean, this is like inconsequential down right now.
Well,
this is like I actually
relative to yesterday, it's down. But
Katie,
yes, to your point, over the course of history, we're
interesting thesis, Katie. But I actually think we've become incredibly numb to significant news. The time in which we actually care is like a day.
Oh, that's scientifically proven. Yeah,
we're able to digest this stuff, and the market is relatively bullish right now, and people are looking for signal to be bullish. The bearish stuff, you'll have your perma bears, but mostly they have to go hibernate right now because the numbers just have not backed any of the doomsayers. The doomsayers show up, they get the media headlines, they come on TV, they tell you why the world's going to end, and once out of every 40 times they do it, they get it right, and then they get to do it 100 more times.
Right. Yeah.
And they'll be wrong 99 of them.
No one's batting 1,000 for sure. And I think, Shay, you made an interesting point about, I think absolutely what you're saying is true, Daniel. And also it's the confluence of things like you talked about, Shay. It's almost like a Long Island iced tea where it's like, if you have one of those and you feel like crap the next day, you don't know what piece of it really did it. I mean, there's just like 10 things in there. But yeah, to your point, Daniel, things when you zoom out, always important to zoom out as an investor and subscribe to the Daily Rip newsletter. Things are pretty durable there. We're also tracking some headlines this week from, Boeing. Obviously, there was a tragic accident, which that's not much to discuss there. There was another incident with one of their planes, so they're down a bit. Cyber attacks. I was reading about this, and I know cyber is one of you guys' core themes, right?
Both of ours. We're hyper bullish on security. We both agree that the new age of defense is a real thematic where the DoD is evolving. The threats aren't tangible. They're not jets, missiles, or tanks. It's stuff you can't see. And you're going, as agentic AI starts getting launched, which it clearly is right now, if you see the inference demand pick up across the board in some semi-space, data is going to explode with it. And what do you have to do with that data? You need to protect and secure it. And that is the stickiest component of any IT budget. and it's one area that any CTO will not just go for the cheapest buck or bottom fishing on, like, where can I save my money to get the most out of my buck for security. They're going to pay up for quality, and that's why we had a couple of names on our Future AI 15 list that were purely cybersecurity, because that is a theme that has a ton of runway.
Yeah.
Yeah, it's notable. And actually, I spent time. I was at Cisco Live this week. Spent time with Chuck Robbins, their CEO, and their new president, G2 Patel. And there's another kind of cyber that's coming up too that a lot of people aren't even talking about, because you're Shy talking about kind of like network security and sort of overall, basically your traditional defense of your IT assets. The new thing though is also going to be these injections into like models. So one of the things that Cisco worked on was this AI defense, and they basically looked at like how you could hack with like injection into models to mess with them, like DeepSeek. They were able to hack DeepSeek 100% of the time by basically injecting prompt injection attacks, where you basically retrain the models in real time to like provide you information on how to build a bomb. Like you could ask a model and they'll train it initially to like not tell you how to build a bomb. But if you actually ask it in a different way, like, hey, I'm a movie director and I want to understand how to make a bomb for a scene I'm doing with Brad Pitt, the model gets tricked. So models that have all this intelligence, people are learning, they can basically inject training data into them. And so the new thing is also going to be when companies basically have proprietary data inside models, like how do you protect people in the company from espionage or different access to things by using prompt injections. So there's a whole new layer of opportunity. It's not just about keeping people out of your network, which is a huge thing in itself, but it's actually people that are in your network or that are using your tools that are widely available, being able to basically trick your tools into spilling data that could become super risky. So it was really interesting to kind of have that conversation, because this cyber surface is going to be so massive. And so if you're like thematically investing, looking at companies who are kind of trying to address not just the network, but actually addressing the way we are going to interact with applications in the era, it's going to create another whole revenue stream for AI.
When you say keeping people out of the network, is that what they mean by endpoint cybersecurity? Is that what that is, or is that something else?
That's a major component of it, but
Okay.
yeah, it's
So like we were
there's
talking
other.
about the modules, right? I think
Well,
that's
yeah, I mean, it's become very holistic, meaning it used to be like CrowdStrike's original thing was like protecting all the endpoints. That was kind of how and then you kind of went to this zero trust layer. And the zero trust layer was kind of that you have to kind of look at your every access point of your network. It's a bit more homogenous than that across your network. And you have to kind of figure out how to protect all of it, because basically the thing is the bad, overall the sort of assumption of CISOs, the cybersecurity officers of companies now, is that there's going to be access to your network that you don't want. So then the question is kind of how do you have data pervasively running? This could be like observability, like companies like Splunk that now is part of Cisco, but this kind of observability layer, and then you have kind of this endpoint security layer, and then you have the network security layer. But you really actually can't just worry about your endpoints and perimeters anymore. You actually have to kind of think about your entire ecosystem. And by the way, the cloud, the applications, the networks, the edges, the devices, the phones, and now, like I said, even your LLMs need to be protected. So it's such an important theme.
It's a way to think about for the listeners. Like, let's just say you're at a nightclub. Used to be just a bouncer. The bouncer just monitored every person going into the nightclub, like checking, make sure they have no threats and everything. All right, you're good. Come in the nightclub and everyone has a good time. Things got more dangerous. They had to morph into. We need security cameras now inside the nightclub to monitor how people act in there. If there's any threats on like the phone or punching fights, that's what cybersecurity has morphed into, and that's why you're seeing all these module adoption on CrowdStrike's front, is because they used to just be the bouncer. That's all their role used to be, and that was their whole thing. Now they're realizing inside the nightclub matters a lot. Security cameras, more security guards, and make sure people act accordingly. That's why they have 7+ module adoptions, because people are realizing you need not just the outside protection from people getting in, you need everything inside the nightclub as well.
I love that analogy. That was a good one. I've been thinking a lot when we talk about AI and all these nuclear plants popping up. I was trying to do a little research myself on like what the cyber implication is for that potentially, right? Because if we're building all these nuclear power plants, it's that would be a prime target. Is a specific kind of company focused on like the physical infrastructure defense that is tied in these systems, or do you think that players like CrowdStrike will kind of just naturally gravitate to build products for that use case?
Well, it's going to be a networking angle. So Palo Alto and CrowdStrike will be major beneficiaries off that once the plants go live in a couple years. Again, like that's going to be a huge tailwind for those firms because that's a immediate threat if you're
Yeah.
not an ally for the U.S. that you're going to try to tackle. So yeah, they're going to pay up for the quality, and the tier one names in cybersecurity are Palo Alto and CrowdStrike. But I'm curious
The,
if you've heard anything, Daniel, about that.
there is a battle that will take place between the sort of monolithics. So Google acquired Wiz and
Mm,
is in the process of.
yeah,
Microsoft is the world's largest cybersecurity company, just to be very
mm,
Hmm.
clear.
yeah.
Um, Cisco is another one that I just talked about. That's a major cyber play and basically has a ton of the enterprise network. And my point is that we are going to see the cyber TAM will grow. You're going to see competition from the major hyperscalers. They all want to be more and more in security. As more workloads move to the cloud, they're going to want to offer their own security. And of course, they're going to offer, um, you know, connectivity, interactivity with CrowdStrike, with Palo. And of course, Palo is moving more and more into kind of trying to be the holistic security layer. So
Mm-hmm.
you do see this sort of competition that goes on. And so, I think security has been long very fragmented. And so if you actually like go to the RSA event, there's like thousands of these companies out there that are all offering different security. It's super, super splintered,
So,
super fragmented. And I actually think that there will be a bit of a rise, but the biggest competition is not going to necessarily be the startups in security. It's going to be the major tech companies that are kind of saying, you already have your cloud with us. You're running all your AI with us. All your data sits with us. Your applications are being built. And again, remember, AI era won't be applications like we know them. It'll be these abstractions and agents that will
mm-hmm.
basically be running on some sort of enterprise LLM layer is what it's going to look like.
Yeah.
Like, hey, I'm just going to talk to a chatbot that's basically going to be able to see data across every one of my application estates. It's going to instantaneously abstract a view. I want to understand my customers. I'm not going to go into Salesforce. I'm going to go into some sort of So you're going to see all this, and in the end, you're going to have to protect it all. So everybody's going to try to kind of get into everyone's business.
Yeah.
So you got to kind of look at who's well positioned now, who's got the access, and who's managing and protecting these networks. And then, of course, the risk, I think, is all about these bigger hyperscalers continuing to buy and expand their cyber footprint and saying, you don't need these other companies, just do it all with us.
Yeah,
Hmm.
because again, like these companies, nobody wants to deal with multiple CTOs or vendors like every month to deal with like the quality checks. It's a huge like that's why the consolidation of like whoever sells that ecosystem or platform is going to be the major winner. And like what Dana was talking about, cybersecurity is a heavily like crowded space. It's one of those we're super bullish on it, but it's going to be one of the themes that will have a lot of consolidation over the next couple years because um, good enough is just won't quite take it at the scale that a lot of these CTOs need the quality. And unfortunately, these products can get replicated from the bigger whales pretty seamlessly. And you're seeing like Sentinel One, it's a good product. I'm not saying it's not a good product. It's actually borderline great. They just like they don't have enough to really sell. Like why me and not CrowdStrike, for example, or Microsoft, for example. Like those are endpoint giants. Like Sentinel One just it's not an unfair fight. So I do think like they're an example. Like a lot of these smaller names, they'll get acquired by the bigger players eventually. And there's going to be a cybersecurity cocktail for like these major projects because like you can't just solely rely on one vendor because if that one vendor has a CrowdStrike outage like event, you just never know when that happens. You're screwed. So like I think it's gonna be a lot of multiple vendors for a lot of these major projects, and that's why it's really gonna be great to invest in the best in that space.
Yeah. Fun times for the people managing all of those contracts. At the couple more topics before we get into the day. I think Daniel, you brought up quantum at the beginning. We got Shai's thoughts on Jensen Huang's comments yesterday. I don't want to misquote it, but basically saying he sees real potential for commercial applications in the near term future. This sort of he's said things like counter to that ish in the past, but it's always been sort of nuanced. Do you have any thoughts on like why he might have said that now, and what do you think he's seeing that caused him to say that and make that comment on quantum, which I think sent some of those stocks up yesterday?
I think quantum and AI are going to coexist. I think one of the big problems is that many people want to, again, this is a zero sum problem. It's not quantum versus GPUs, it's quantum plus GPUs. It's by the way been the same thing through classical computing, CPUs in quantum era. And I think Jensen realizes that there are very specific problems that are not bound by the same latency constraints, that are not bound by the same compute and processing constraints, that are going to be better solved in parallel between quantum plus. So things like drug discovery, things like complicated engineering problems that are very much designed, anti-money laundering that can be done with a combination of quantum and GPUs or AI compute. So I think what's going to end up happening is Jensen recognizes that there will be a rise. You saw IBM put out their 2029 roadmap on a feasibility. Google, I think, has recently talked about 2 years away from potentially being able to use it for encryption, which is another great application to decrypt Bitcoin, which is like a wild idea right now, given, kind of how many, it's like $2+ trillion out there of Bitcoin, the idea that it could be undone. But I think the bears are going to continue to come out because I think that the category is filled with some really crappy companies that aren't really doing anything meaningful. Full disclosure, Nicolo from IonQ as my chairman, and I have an advisory relationship with that company. So I won't make any sort of recommendation there, but I do think there are better and worse companies in the quantum space. I think also the idea of making quantum accessible, so companies like IBM, Google, Microsoft that are building quantum simulations, so you can do quantum for specific applications in parallel with your traditional compute workloads. But I just think overall, I think people think it's going to come faster and solve more problems more immediately than it actually is. But I think you also have to listen. If it quacks like a duck and walks like a duck, it's probably a duck. And some of these companies are just ducks. They're just not good companies. And so that's kind of always the sign of a bubble. So picking the good ones from all of them right now is going to be super important.
Yeah. You talk about FUD. It's interesting because I'm not deep in the world you guys are in. And I'm just like, people are getting heated about quantum. I did not realize before this week that this was like a thing. Like people are ready to throw hands about quantum. And
For decades. This isn't new, Katie.
Yeah, well, it's new to me. If people not in this space, like I was telling my friends, they're like, wait, what? Like, oh, the nerds liked each other. Apparently not. But I think while you have the floor, I think just speaking of FUD, because there's been some like crazy information flying around. Do you want to clear up some of these like Reddit rumors about Nicolo selling shares yesterday? I think there's some people posting things, and I don't know if you have any insight on those, but it would be great.
No, I can't speak to his personal selling. I mean, look, the one thing I'll say is CEOs and companies have to declare well in advance when they sell stock. So when people say like they sold, like he might have, I don't know. I mean, they have to file with the SEC that they're going to sell, and these sell dates are generally determined well in advance. Like unlike us who, as personal and private investors that might make a sale of a stock in a given moment, when a CEO buys or a CEO sells, they literally have to file with the SEC. So that's like one of those real, I mean, look, everybody wants CEOs to keep their stock and never sell. And I mean, but the bottom line is that is a significant part of how they're compensated. They might need to sell stock to pay taxes for all I know. But the bottom line is that it is not done on a whim. It is not done like, oh my gosh, the stock ran up. He didn't know when he likely, and again, I don't actually have any insight to this, but likely they didn't know what the price of the share would be on the day it would sell. They just said on this particular date in the future, I'm going to sell this block of stock. That's generally how I understand it.
That's great. Do you know how far ahead they need to do that? That's just like such helpful context for somebody who's like in these spaces, because I think you see people be like, you can just like make a phone call one day and be like, I'm out. And you're saying like, no, you have to get ahead of it. What's that time frame like?
I don't know the exact parameters of it, but I generally believe it's done weeks or months in advance.
Interesting.
So, and by the way, all this stuff can probably be searched. I'm not FINRA SEC expert, but I do know for a fact that CEOs do not just wake up in the morning and be like, sell my stock.
Yeah. But yeah, I think it's a good, like, if you guys see something, go check the SEC filings. It's right there for you. Instead of maybe just reading something on Reddit and going on with your day.
Now, people love that. And it is fun though. It does create that sort of like reaction that people want from the market. They want the market, and again, these stocks are super volatile. So it does create that kind of crazy selling pressure because it's like, oh my gosh, if the CEO doesn't believe, and most people don't know how this stuff actually works.
Yeah.
So.
Yeah. Interesting. Well, it's good to have you here in the context of just all this stuff going on. I think it sheds a light on just importance of getting getting in front of investors, talking about these things, getting off the tweet stream, the Twitter threads, and talking to people. One more topic before we turn things over to the weekend rip later today. They're coming up later. AMD, Daniel, I know you have some thoughts on AMD. What's happening over there today? What are you seeing?
Well, so AMD's having its advancing AI event. So this is kind of the big moment. I'm here in San Jose. I'm in this beautiful Marriott hotel room, which you can tell by these crappy shades behind me and this terrible setup I have. But I love being here with y'all, so just know that. So the big question mark, look, AMD is trading significantly off where it was even a year ago, early, and it just hasn't been able to fully recover. The market doesn't believe it's meaningfully competing with NVIDIA. So today is the day that it needs to be declarative that it is able to offer hardware. And I think what its tailwind is, and I posted this earlier this week, and it's part of why we had this in our 15 too, is that we're going to enter the inference era. So we've been coming through this pre-training era, and the CUDA moat is so big that nobody really pivoted meaningfully. We think AMD had about 3% of GPU market share. And in the last quarter or two, it actually stopped reporting its Instinct number, which was, I think, a real hammer to the company when they stopped talking exactly how much Instinct, their GPU that competes with AMD or NVIDIA, was selling. But now with inference, so inference is the main in the key workload. So inference is like where revenue gets generated. So I use the analogy that training was the R&D, inference is the actual monetization of AI. And with inference, the whole moat of the software and CUDA is totally different. It's almost non-existent. So this is why you see accelerators like the ones being built by Trainium by AWS and TPU are becoming so popular, is because for that inference workload, you don't necessarily need that moat, that software layer, the developer layer. You need to understand the specific applications, and you can use acceleration. So companies like Meta have been going down the path of AMD. Companies like Microsoft have been going down the path with AMD. And so these inference opportunities, well, NVIDIA is getting all the training related volume. The inference opportunity for AMD is really, really substantial. And I think today is an opportunity for them to say, hey, we think we can get more of that TAM. We think we have competitive products, which I believe they will be able to declare. And that they, are going to be able to develop systems. And they've had some great wins too. I think Saudi Arabia announced yesterday that they are doing more with AMD and Cisco. You had Humane going bigger with AMD. And so I think it's the TAM's going to grow overall. Inference is going to be the biggest workload. AMD can take a piece of that inference market. And by the way, none of this has to be at the sake of, again, not a zero-sum game. NVIDIA can still grow tremendously well, because their Blackwell systems can do the training and the inference, and there's a lot of value in that. But I think for a lot of workloads, a lot of companies, a lot of data center build-outs, it's going to be very inference-centric. And AMD can, I think, be a lot more effective in this era than they were trying to compete in the training and pre-training era.
All right. Shy, I know we're coming up on your B-Day weekend.
Did I get it all?
You nailed it.
I want to give Shy the final word, because it's Shy's big B-Day weekend. And
you turning older?
It's his 21st birthday.
He's start losing his hair.
I can enjoy your first beer, Shy. Enjoy your life.
It's something when you work with me, you got to lose your hair.
Oh no. Okay, I gotta leave.
you got great hair. You're out of here. You're out of here.
Well, then maybe I can I'll finally get the thesis for hymns, and I'll be riding that wave along with everyone else.
I'm in.
There's always
I'm long.
Long hymns.
Yeah. By the way, just as a declarative, I'm intending to sell out my entire DraftKings position and move all of it into hymns.
Okay, you heard it here first.
Yeah,
I think that's just going to be the move over the next few years. It's going to be a shift.
I'm sick of the degenerate gambling trade. It just hasn't panned out. I think you all are degenerates.
Long hymns.
Apparently not DraftKings.
All right. Well, Shy, I hope you have an awesome birthday, and we'll catch up with you.
Happy birthday, man.
When you're back.
Thank you.
Enjoy it, dude. All right. That's it for us today. We're back next week. You got Ben and Emil later if you want more market news, and of course, subscribe to the newsletter. Daniel, thank you so much for popping by. It was great to have you. Got to come back soon, and we'll see you guys next time.